Investment planning. Investment planning is a process of identifying financial goals and converting them by a plan. A well-managed investment planning can actually result to wealth. But it is important to remember that in all investment planning, we need to match our available resources with our goal. This is because we have to avoid making bad decisions in investing. Furthermore, know that these days there are many vehicles in investing, which is the most common is cash, stocks, and bonds, and not to forget property. Financial asset. Financial asset is high risk, short-term, and direct. The example of financial asset is cash, stocks, bonds, mutual funds, and bank deposits. Financial assets do not necessarily have inherent physical worth or even a physical form. While real assets is known to be low risk, long term, and indirect. The example of real asset is for such as land, property, commodities, or other tangible physical assets. So now I'm going to talk about types of investment. Think of the various types of investment as a tools that can help you achieve your financial goals. Each broad investment types, no matter the bank products, the stocks or bonds, has its own general set of features, risks, and factors that follows with. First, we have investing in savings account. It is known to be the most basic investment with easy procedures and low initial deposit to open an account at any savings account banks. And second, we have investment in fixed deposit account. Fixed deposit account is an account that promises investor a fixed rate in interest in return of investor not to taking out their funds or money that are agreed with some period of time. And third, we have investment in shares, which is it was well known that shares have a wide range of choice in investing, really up to us. And usually the investor that invest in shares hire the manager that could help in giving investing tips because they have knowledge. And next, we have investment in real properties. Here, I like to remind that not all properties are worth the price. So, in order to invest, investors need to do some research and consider all aspects when buying the properties, which is including the depreciation rate that the properties offer. And lastly, we have the investment in unit trust. This investment is usually managed by others.
Investment planning is an important part of a financial plan since it enables people to achieve their life objectives and provide resources to help them overcome financial difficulties. Firstly, the investment has a potential for a higher returns because investing funds is a trade-off since the investor forgoes the value of spending the funds for his investment now in exchange for a higher utility in the future. The most essential objectives of the investment process to earn a return in the form of interest and dividends. Next, the investment is to outperform the inflation because a major concern to investors since it reduces current real savings and future earnings. If we do not do anything with our money today and keep savings in the account, the money will not grow and decline in purchasing power as in inflation. Investment planning can help clients outperform inflation and expand their income without having to worry about rising price. The after-tax rate of return must be higher than the rate of inflation for investment savings to grow over time. Lastly, the investment also can bring us to reach financial goals. People can achieve their long-term financial goals with the help of investment activities. Individuals can simply increase their wealth by investing in long-term assets to receive a large sum of money. Investing also helps in the achievement of both short and long-term objectives with minimal stress and effort. Therefore, investing in bonds, stocks, and mutual funds can lead to achieve financial goals.
In this modern world full of technology, we need to open our eyes of current tricks or investment scams around us. Lately, many people among youngsters involved in the forex trading like mushroom grow after rain. There are scammers who look for opportunities to make profit out of these beginners traders. For example, they have programs that guarantee weekly returns of 12 to 14%. Then, the investor will be informed that their funds will be invested by a trading firm. The investor will be given access to website to track their investment, with the syndicate cutting off communication with its investors and suspending the investment scheme activity after it met its investment target. Another example is a Macau scam. They are targeting more on older people, especially retirees. How it is modus operandi works? This group uses a technique via telephone call that appears to be from a trusted official, either from the court or the police department. They will allege that the name, identification card, and bank accounts of the victim are connected to drug-related crimes and money laundering activities. Other tactics also include tricking victims into thinking they have a won, lucky draw, and even stage a kidnapping for ransom.
Based on statistic information for advertisement planning, we take based on newspaper clip showing case of investment found that have erosion over the last 2 years. In 2021 show more than 4,800 white-collar chairmen with big loss for more than 420 million rumors. This is due to influencing or trusting investment advertisement in social networks such as Facebook, YouTube, WhatsApp, and WeChat. Online investment found double to 3,195 claim at a cost of more than 245 million scam. Therefore, it can be said that 2021 is higher than 2022. Here is always show the scala of investment risk between ASB, fine deposit, physical gold, common gold, stock, real estate, stock trading, forest trading, and gold trading. Based on this scala, show that ASB and gold are goods among other.
Next, we will move to consumer credit. Before that, let me introduce myself. My name is Siti Aniswaraya binti Ismail. Consumer credit can be defined as it allows consumer to borrow money or incur debt and to defer repayment of the money over the time. There is two types of consumer credit, which is open account credit and loans. Open account credit is credit given to customer in advance of a purchase, and the credit limit allows the consumer to buy or borrow up to certain amount, while loan is an exchange for future repayment of the principal plus interest when you get money from the friends, bank, or financial institution. There are four types of open account credit. First, credit card. A credit card that is issued to user depending outstanding debt without using cash. For example, MasterCard or Visa. The second type is charge card. Charge card is an electronic payment card that does not charge interest but demand full payment of statement balance. For example, American Express card. Return charge card is one that gives you points for spending money in store. For example, Aeon card. And the last one is revolving credit line, is a sort of credit that does not have a set of amount of payment. Then, types of loan consist of three, which is personal loan, car loan, and education loan. Personal loan is a sum of money that can borrow to use for a variety of purposes such as payment for home improvement. Second, car loan is a borrower take this loan to fund the purchase of a new and used car. And lastly is educational loans, which is a sum of money borrowed to cover the cost of post-secondary or higher education such as a PT, PTN or MARA. Next, advantages and disadvantages of consumer credit. Advantage of consumer credit is its very convenience, which is useful for online shopping or for avoiding the need to carry big quantity of cash. Then, consumer could gain great rewards if they use it appropriately, such as cashback. While the disadvantage is high interest rate through revolving consumer credit, which consumer need to pay a high interest rate. Besides, borrowing on credit usually lead people to spend more than they earn, resulting in debt.
The importance of consumer credit. Credit is a financial tool for customers, but if it's misused, it can lead to major debt difficulties. Credit refers to the opportunity to buy something with the guarantee of paying it back later. It helps business to get the equipment to produce product. A company that is unable to borrow money may be unable to purchase the machines and raw materials it needs, as well as pay the personnel it needs to produce products and profit. Furthermore, credit is definitely plays a crucial role in keeping a productive economy running, but it also benefits individuals. Many people need loans because they can help them grow wealth by allowing them to pay for college, enhance their earning power, buy a home, and profit from rising property values. When it comes to evaluating economic development, consumer credit is also essential. The economist monitors consumer spending on a monthly basis to determine if the economy is expanding or contracting. For example, if people are acquiring credit quickly and are confident that they will be able to repay the loan on time, this shows that the economy is expanding. And lastly, credit is important for another reason for credit reporting. Credit reports and ratings are based on information such as whether you make late or miss loan payments, and lenders will consider when deciding whether or not to lend to you.
Buy now, pay later is a type of short-term financing that essentially allow consumers to make a purchase but pay for it later or via installments over a short term of period. Currently, some consumers have been trapped in debt with this system. This is because the concept is actually make us purchase item that we cannot afford in the first place. Some buy now pay later service applies higher interest on the item price, make the consumer struggle to pay every month. If they cannot pay when it's due time, they will be charged late payment fees even more. So this will cost double or even triple price of the item, cost over 1,000 ringgit and in a longer period of installment. The worst case that affect consumer is when they purchase more than one item when they actually able to pay one item installment only in every single month.
Based on the statistic information for consumer credit that we take into account BNPL, that is buy now pay later. The first graph shows the transaction value, the number of activity customer and the result of the BNPL company indicator. BNPL financing increased 93% compound annual growth rate as value, consumer and revenue sources in 2020. Leading BNPL companies saw significant growth in value and customer in 2020. The second graph shows growing in BNPL state setup financing. BNPL setup funding increase at the compound annual growth rate of 93% from 2016 to 2020 and increased significantly over the past 2 years. Therefore, responsibly, BNPL player need to look at way to indicate consumer on financial literacy and smart spending.
Investment planning management must be with the goal
need explanation, issue and concern, as well as how to determine the successful and investment. Therefore, we must adhere to the rule to continue to invest, identity and rebalance periodically. Approve the fine income portfolio period during period of increase and greater control over interest rate deadline due to tax planning and management that most accumulate venture. Investment planning is something that need to be embraced in one life to ensure a purposely life. Through financial planning, we can identify ways to budget, saving and spending money over a period of time. For consumer credit, the rapid transformation of the domestic and border system bring new opportunity and challenge for money institution. Therefore, shaking payment seller how should rethink their business model for higher information, observation and integrate financial options set with buy now, pay later, price increase proposal and key technological enability for further growth including: first, from a technological and industry perspective, payments are no longer a decision-making process for bank. Second, with reduced margin, there is a desire to maneuver in many inventive areas to see financial gain opportunities. Lastly, to be successful, organizations need to be forced for embark on technological infrastructure, improve equal pricing, action and adopt a model that will prove further value.
As for conclusion, it is important to have knowledge about investment planning and consumer credit. We also need at least one investment planning for our future, and remember to use consumer credit wisely for avoiding excessive debt.